Hello traders and welcome to another video review. Today is Thursday 28th of the January 2021. Let's take a look at the Forex calendar and then we'll do some technical analysis as well. So let's just swipe down towards the Thursday. What do we have here? Some data had been released overnight, like retail sales from Japan, but as you can see, they were way below the forecast, minus 0.8% versus the 0.5% of forecast. So no improvement here in Japan. And during the London session, as you can see, there isn't much of a interesting high impact data releases. We got consumer confidence from the Eurozone scheduled for release at 11 o'clock a.m. and at 2 o'clock p.m. we got CPI and harmonized CPI from Germany. As you can see, the forecast is 0.4%, while the previous reading was 0.5% of the CPI. So that's the key event for today from Germany. During the New York session, we got GDP data from the US. So the USA GDP for the fourth quarter is scheduled for release at 2:30. Then we got a bunch of the data from the US. GDP price index, good trade balance, wholesale inventories, unemployment claims. As you can see, they are scheduled for release 2:30 as well, and the forecast is 880,000, while the last reading was 900,000. So we will see if there will be any better than expected. Continuing claims as well, and then we have some bunch of data from the housing market, new home sales leading index, and that's it. For all of you who trade the natural gas, 4:30, there is a natural gas shortage change from the US. So the London session is supposed to be kind of quiet after yesterday. The FOMC, as you can see, had decided to keep the interest rate 0.25. So it should be kind of a quiet. Maybe the GDP, if it will be worse than expected, really worse than expected, GDP of US, of course, might do some change to the current situation. So let's take a look at the US dollar index, I guess, because there's plenty of data from the US. So we will do the US dollar index and the indices, the American indices, of course. So what do we have on the US dollar index? As you can see, the market follows our chart quite good. We got the top for the wave A, 90.91. Then retracement wave B to the 50% of the wave A, 90.06, and then we got very nice bounce, and the bounce is being continued for today. It's early in the morning and we have a green candle. Of course, there's plenty of the hours to close the candle. This is a daily time frame chart, so the target is, if there's still potential for the green candle to go higher, 91.1. This is where the blue arrow is, and of course then we got all of this Fibonacci retracement, right? So we got the targets for the wave C at 91.30, 91.95 and 92.60. Between these levels there are some technical resistances like 92.44 and 91.72. We will see where the wave C will terminate. I guess that we can just remove the retracement for the wave B. Yes, thank you very much. And now we have only the targets for the wave C. So for now, the outlook is bullish. As you can see, the momentum is 55 points, so it's getting up. It's pointing to the north. So for now, the US dollar is supposed to be bouncing higher, especially towards the 91.1, and then we got some new high, and we see how deep it will retrace apparently. So SP 500 index, if the US dollar is bouncing, then of course the US index is supposed to go lower, and as you can see, this is what is happening. The intraday technical support 3000 827 had been violated, so we can just put this level here, maybe, yes, on the lows of the 15th of the January. They are somewhere around the level of 3,747. We have a new new high, so we just mark the new high as our technical resistance, of course, and as you can see, we are still trending inside of this channel. So let's just take a look at this channel. Some sort of a pin bar here and pin bar here, kind of a the market is kind of telling us that it's undecided. It doesn't know if it wants to go up, if it wants to go down. But this bearish candle is very interesting. But please pay attention to, for example, that candle and that candle. Yeah, they're both bearish candles, and the market made another higher high afterwards. So please don't get too much excited about this big sell-off candle, because in order to confirm it that the 3,869 is top, we need to break way lower. We need to break below 3,715. That means we are out of this channel, right? So because the channel is somewhere here. Can we update it? Yes, we can update our channel even here. We are out of the channel then, and 3,715 technical support, 3,674 is the next target. So please pay attention to this one as well. And then of course we should go as close as it's possible to this this green zone. Okay, this green zone is the key technical support, 3,549, 3,529, and this zone here is demand zone. Blue arrow is exactly showing us where we should go if this is a genuine breakout to the downside. So far, please pay attention to this upper channel line and the two nearest technical support levels. Let's make it green because it's support, so it's still support anyway. It might be resistance tomorrow, but so far it's support. So green lines, please pay attention to them, and it looks like we got some momentum down. All right, the market is below 50 points. The low was made at 44, so that's kind of interesting. If we get out of the channel, we might accelerate lower towards this level. So is any other indices, is another index confirming that? Yes, it is. What was that? This is the Dow Jones, of course, Dow Jones Industrial Average. As you can see, the same situation here, breakout below 30,789, and now we are getting lower. So our next interesting level is 30,569. We are getting closer and closer to the technical supports. There are still supports, so let me just put them in the right color, and they are of course like this. Okay, that would be the resistance. Kind of a topping action here. We got this. I thought it might be the rising wedge. So if we just maybe we can do the expanding wedge, but something is cooking here. Something is cooking here. Not quite sure what. It doesn't look like a textbook example of any sort of a wedge or something like this, and this is why it might be a little bit confusing. But anyway, it still looks like some kind of a rising wedge with like a topping pattern, like a overshoot here. But anyway, if we get below 30,000, then the things might get nasty. 30,108, 30,055 points. This is the technical support and the lower boundary of this rising wedge or this trend line. So please pay attention to this level as well. The next target would be 29,862, and then of course the lows of this big pin bar, which is 29,435. Still, key technical support, key demand zone is the green rectangle between 28,959, 29,197. So please pay attention to this. Maybe we will get there. And the last one, last market that is related to the indices and the US dollar is of course gold. let's take a look at the spot gold. What is going on here? So not much volatility on the spot gold. Why? We get out of this channel, fell out, made a new local low 1817. That was the technical support, but the low was 1809. We tried to rally, but no avail, absolutely no avail. The market had been capped, and then during the last week, as you can see, we slowly going lower and lower. Currently, market is trading below 1848, getting closer to 108,017 and $1,809 on very weak and negative momentum. So if this level is violated, then we would get very quickly towards 50% of the Fibonacci retracement of this whole big move up. But let me just put one Fibonacci retracement, because I would like to see how much we will trace of this move up. And we are, as you can see, below the 68% already. So these levels had been tested, so they are not valid anymore. We don't have to pay attention for them. We just can point our last local high 1875. It looks bearish to me, but if the US dollar index will rally and the stocks will be falling down, some part of the capital, some part of the money might get the flow into the spot gold. So please pay attention to this current situation. So far, not much is going on, but the pressure from the bears is quite visible on the spot gold market. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Bye bye.